PayPal just dropped a huge Q3 earnings report, and it really looks like a major turnaround is underway. They're not just putting up strong numbers, they're fundamentally changing their playbook. So we're going to break down the strategy that's driving this comeback and, what it all means for the future of commerce.
And, the company is not being shy about it at all. This quote from CEO Alex Chriss really sets the stage. It's confident, it's bold, and it frames this whole quarter as a comeback story. The big question is, though, can they actually back it up?
Well, the headline numbers sure seem to. Not only did they post really strong financials, but they also raised their guidance for the whole year. And get this, for the first time ever, they announced they're going to pay a dividend. These are all green flags, right? Signs of a company that's feeling really good about where its plan is headed.
So how did they pull it off? Well, this was no accident. It all comes down to a really clear, super focused playbook that's built on 4 strategic pillars, and these have been guiding every single move they make.
Okay, so this is the game plan. First up, they want to completely own the checkout experience. Second, they're pushing beyond just online into physical stores. That's the omni part, while also unleashing the power of Venmo. Third, they're focused on making their back-end payment processing, their PSP, way more profitable. And finally, they're pouring money into the next generation of commerce.
Now look, a plan is just a bunch of words on paper until you see the results, right? So let's connect each of these pillars to the actual numbers and see how this playbook is really winning in the real world.
Let's start with pillar number 1, winning checkout. This is PayPal's bread and butter. They've shifted away from their old standard process and are rolling out a completely redesigned pay sheet that uses things like biometrics to make paying way faster and a whole lot simpler.
And you can just see the difference it makes. Look at this example on Ticketmaster. The new flow is so much cleaner, it's way more intuitive, it's designed to do just one thing: remove all the friction and get you through that purchase with basically zero hassle.
And let me be clear, this isn't just about making things look pretty. In their testing, this new flow actually increased conversion, that's the rate of people who actually complete a purchase, by 2 to 5 percentage points. Now, for a platform that processes billions and billions of dollars, that kind of increase means a huge jump in revenue for their merchants. And that makes PayPal an even more critical partner.
Okay, moving on to the second pillar. This one's all about expanding their reach beyond that online checkout button and unlocking the absolutely massive potential of one of their biggest assets, Venmo.
And when I say massive potential, I mean it. Venmo is on track to bring in about $1.7 billion in revenue in 2025. This thing is not just a social payment app anymore, it's becoming a legit commercial engine for PayPal.
But here's the really interesting part. Where is that money coming from? Venmo's growth is starting to diversify in a big way. While your standard person-to-person payments are holding steady, the real explosion is happening in commerce. Using Venmo to pay businesses and using the Venmo debit card, both are growing at over 20% year over year. That's huge.
Another massive piece of this puzzle is buy now, pay later. You've seen it everywhere. It's one of the fastest growing ways people are choosing to pay, both online and in stores, and PayPal is making a serious play to be the leader in this space.
And the scale they've already hit is just staggering. They're expecting to process around $40 billion in buy now, pay later volume this year alone. So yeah, the momentum here is just undeniable. Both the total payment volume and the number of people using their BNPL products every month grew by over 20% compared to last year. It is an absolute freight train of growth. All right, on to the third pillar, PSP profitability. So this is PayPal's unbranded back-end processing engine. As you can see, it is the single largest part of their entire business. We're talking 45% of their total payment volume. And after a bit of a reset, it's now back to a steady 6% growth. Think of it as this massive, stable foundation that allows the company to invest like crazy in the faster-growing stuff, like Venmo.
So, with the core business just firing on all cylinders, the final piece of the strategy is all about what's next. This is where PayPal is looking past today and is actively building what they see as the future of commerce.
And this vision for the future really has 2 key parts. On the one hand, you've got the PayPal Assistant, which is the engine for what they call agentic commerce, basically using AI to change how we shop. And on the other hand, there's PayPal World, their big push to break down borders and expand payment options globally.
So what on earth is agentic commerce? Well, think of it like this. You just tell an AI, hey, reorder my printer ink, and PayPal handles the entire purchase seamlessly in the background. You never even have to visit a website. It's a pretty bold vision for a totally hands-free shopping future.
But you can't build the future on empty promises. You need confidence in where you are right now. And PayPal is backing up its ambitious plans with one of the strongest signals of financial health a company can possibly send.
And that signal is their first ever dividend. Now, this is way more than just a line on a balance sheet. It is a statement. It's powered by $2.3 billion in free cash flow just this quarter, and it tells shareholders that the company is so confident in its strategy and its future growth that it can invest in innovation and return cash to them at the same time.
So, after digging through the results, this strategy, and what's coming next, what's the big picture here? Why does all this matter? What's the real takeaway?
It's really a classic turnaround story, told in 4 simple acts. 1, they set a clear strategy. 2, they executed that strategy and got real results. 3, they successfully diversified their growth with powerhouses like Venmo and BNPL. And 4, now they're using all that success to fund the next wave of innovation.
At the end of the day, the takeaway is simple, but it's really powerful. Execution is working. This quarter wasn't just a fluke. It is the direct result of a focused plan that is now delivering profitable growth across every single major part of PayPal's business.
Which of course leaves us with the big lingering question. They've proven they can execute a turnaround, but as they move forward to build this next-generation commerce platform, is that same sharp execution going to be enough to not just win today, but to completely redefine the entire future of how we all pay? I guess we'll just have to wait and see.